All right, good afternoon, everyone. Bruce Beddard with Beddard Mortgage Team here. I'm recording this installment of my update on February 12th, 2011. If you need to get in touch with me, please don't hesitate to give me a call. Best way to get me is on my cell, and that number is 847-772-1780. And I guess the first piece of news is we've got a week's worth of weather above freezing. I'm hearing 2 or 3 days in a row where we're going to see in the 40s. Unbelievable. So now, as long as we don't run into an issue with freeze thaw and create a bunch of ice dams because everything is melting so rapidly. But let's get on to the update. Wow, what a week in news this week. First, we learned that Egypt is free of a dictator. And I really have to tell you, I know very little or nothing about that part of the world from a political standpoint. So other than what we expected to have happen, and this was this. We expected that the unrest over in that part of the world would have resulted in driving bond yields down as a flight to security in the United States bond market would have occurred. And yet the opposite happened. 10-year bond rates jumped to its highest levels on Tuesday and Wednesday that we haven't seen in a long time. We haven't seen these levels in bonds, which reached on 10-year bonds, reached 3.77%. Significantly higher than we had seen in any recent past. And this was up from the previous week, and I think last week we ended at like 3.64%. So when it appeared Mubarak would resign, then the bond yield started to fall, exact opposite of what we thought was going to happen. And we closed Friday with bonds back at the 3.65% level, just slightly or slightly above last week or flat from last week. Now, we still have interest rates around 5 1/8 on a 30-year fixed-rate mortgage with 0 points. But this week, we had reached 5 1/4, and we were bordering on going to 5 3/8. So it's a good thing that it dropped back down. And again, I said on the 8th when I gave you my update that adjustable rate mortgages are definitely attractive. 5-year adjustable rate mortgages still around 3.5%. Jumbo arms around 4 3/8. These are very, very attractive rates. We're now seeing about a 1.5% difference between the fixed rate mortgage and the adjustable rate. Again, that's very attractive. That's really starting to save people a lot of money. If they're not into arms, that's okay. But if someone's willing to take that chance, or if they're only going to have a short-term goal of being in this home for less than 5 years, 5-year arm could do them some very good cost savings in the long run. Now, a lot of mixed data out this week in the real estate world, so let's talk about that. The Obama administration announced Friday what we had all expected them to announce, so no surprises there. They said that over the long time horizon, Fannie and Freddie needs to be phased out, and the private sector needs to be the driving force behind the mortgage-backed security market. Absolutely, every single person believes that this means loans will cost more. How much more and when? I don't really know. It likely won't take effect for at least 4 or 6 years, so it isn't as if mortgage rates are going to spike up overnight. But what we might see, and this is just my opinion, so we might start to see increases from Fannie and Freddie in the so-called hits category to all the loans that, and that may be coming as early as late spring or early summer, May, June timeframe. Now's the time to tell your database that they should refi now before we get more increases from Fannie and Freddie like we got in January. And basically in January, what Fannie and Freddie did was they just came out with more hits. It costs more to do a loan with Fannie and Freddie, unless your FICO score is, say, I don't know, above 800, and if you have 50% equity in your home. And significant numbers of people no longer have that kind of equity in their home, and so therefore it's costing more for them to get a loan today. Make yourself look like a hero by telling your people now to take advantage before rates go up more and Fannie and Freddie make it more difficult to get a loan. Of course, you can always have them call me, or you can call me and talk through their scenario. I'd be happy to help with that. I will give them great advice. I have very attractive interest rates, and I will personally make sure that they get treated properly and are given the appropriate response for their specific circumstances. Now let's talk about foreclosures. We cannot talk about real estate without talking about foreclosures. The total foreclosure activity, that encompasses the entire process, was up only 1% in January. And it's way below what was expected after the robo-signing had stopped. We were expecting that the foreclosure rates would spike up in January and February and that we'd see that increase by 5 or 6%. So the other aspect of it, notice of default, that's the early stages of foreclosure. They're finally starting to say, the bank is saying, you're not making your payments, I'm going to file a notice of default with the court. In January was at the lowest levels in many, many years. The question is, are we getting out of the woods when it comes to foreclosures? I seriously doubt it. Or are we simply spreading the pain out over a longer time period? It's like, do we want to rip off a Band-Aid slow or fast? If you rip the Band-Aid off slow, it hurts less right now, but the pain lasts longer. If you rip it off fast, it hurts more now, but the pain goes away sooner and you can start to heal sooner. Again, my radio show is always looking for top-notch real estate professionals to be guests on the show. So if you're a top-notch real estate professional, or if you know of a top-notch insurance, financial planner, an estate attorney, divorce attorney, bankruptcy attorney, or if you know of a builder, or if you are a builder, I'd love to speak with them. I especially need a credit expert. They will do well on the radio show. Remember, I'm here to assist you in any way that you feel will benefit you and your business. That's what I'm here to do, help you. Because I know if I help you, you'll help me. Just give me a call. My number is 847-772-1780. I will make myself available to help you in any way that I can. So just give me a call. I want to help you make a difference in your business. Again, give me some feedback off of this update. Are there things that you want me to talk about in these updates that I haven't been talking about? Do you want to hear more about, I don't know, FHA loans? Do you want to hear more about jumbo loans? Tell me what you want to hear about. I'd be happy to make sure that I incorporate them into this type of update. This update is for you, so I want to make sure that it's benefiting you. I hope you have a safe and prosperous weekend. We're going to take back this real estate market one transaction at a time, you and me. Bruce Beddard with Beddard Mortgage Team. See you next time.